Good morning or good evening, depending on where you are. The markets are setting all-time highs across the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, all at all-time highs. I want to tell you why I think that's happening here in just a few minutes. We took off another winner last week, Ryan. Now we
Wow,
have,
what is that, like 50? God.
yeah, pretty close. 16 straight
Oh, man,
winners,
that's
and
awesome.
we have another on Beyond Meat that looks like it's destined for profit as well. And there's some really good setups for today. Lots of them, in fact. I've got one that I have my eye on. If you would like me to look at your stocks, please pop them in the chat box right down below here. We're going to talk about my Sniper Guidebook free giveaway. And then we're going to do our live trade here in about 15 minutes live on a company that you all know about, especially if you live in the United States. So let's hop right in and take a look at what's up with the markets. I'm going to go into the Hub software, really cool charting software I like. And this is a chart of the S&P 500 ETF. ETF is an exchange traded fund. It's a stock that tracks the S&P 500. All right, so look what happened yesterday. Previous all-time high was right over here. And we breached it with great enthusiasm, hit this 530 level, which will be some level of resistance. But why did that happen? Well, let me show you what happened. Here, what is that? That was a Tuesday? The PPI, the Producer Price Index, it's a report that shows how expensive or not it is for producers, people, companies that make stuff. That came in a little bit hotter, implying that inflation isn't going anywhere. In fact, it's ticking up for producers. And what I was curious about is typically that would have dropped the overall markets, but the markets shook it off. Well, that's not what we want to see. Now, remember, what the Fed wants to see is inflation cool off. And when that cools off enough, the Fed will start cutting interest rates, and that's what the markets want. So there's an inverse relationship towards interest rate hikes and cuts. And so cuts tend to drive the market up. All right. Now that was yesterday. Markets shook it off, kind of a little bit of an update. And then this morning, yesterday, this is yesterday's all-time high close. Yesterday, the CPI, the Consumer Price Index, revealed that things are getting cheaper for us consumers. The markets love that news to the tune of raising the S&P 500 up to an all-time high. Same thing happened on the NASDAQ. Here's the NASDAQ. Lots of tech stocks in the NASDAQ. When I look at the NASDAQ, I'm like, well, tech stocks, what's tech stocks doing? Tech stocks, XLK, this is an ETF that tracks that particular sector. And that sector, that ETF, that stock gapped up to all-time high territory. So tech is hot, y'all. You can also look at semiconductors, SMH. Here's the SMH, and that is not quite a closing high. That's the all-time closing high right there. So we're right about there, but semis are making a strong run as well. What stocks are in the semiconductor sector? NVIDIA. NVIDIA's one of them. Applied Micro Devices, Avago. There's several companies that are putting out these AI chips. So if you're trading directionally, I would say tech is a good place to look, in particular semis. So if you're a stock trader or even a credit spread trader, doesn't matter. That trend looks destined for further upside. So depending on how you trade bullishly, look at those sectors. The Dow Jones Industrial Average, also all-time high territory, right up here. That was the previous all-time high on the Dow Jones Industrial Average. And when I look at the Dow, I also look at the XLF financials. Financials are hot as well, setting a multi-year high there on financials. So financials is a good place to look for bullish candidates at the moment, and pretty much everything's going up at the moment. But those two sectors, semis and financials, seem to be making a really strong run. All right, now let's talk about our closed trade from last week. This was on Carvana. We got into the trade after the company blew out their earnings, lifted future guidance. We had a line in the sand. We placed the order. We sold the May 17 90 put, bought the underlying put, hit it 5 times, got 10 cents a contract times 5, $50 on 450 risk. You can, if you understand risk graphs, let me just quickly show you what this is. This shows profit, and this shows potential loss or risk. Now, look, at expiration, right there, we make money. So when we place the trade, stock goes sideways. We made money. We pulled the trade off on Monday. Not quite ready on Thursday when we met last week, but it came off Monday morning for 1 penny, and we netted $45 on 450. That was a 10% gain in a matter of 11 days. So that trade came off. And then last week, we placed a trade on Beyond Meat. Beyond Meat. And what we did on Beyond Meat, after some bad earnings, so the earnings were bad, and we sold a 9 call and bought the 10. So basically what that means is with the stock, when we got in trading at 7, we said, well, I don't think it's going to get back up above 850. And so we sold a 9 call up here. Let me take you back to yesterday, because some weird stuff happened with Beyond Meat. Ryan, you remember the meme stocks? GameStop and BlackBerry and
AMC, all those.
AMC was another one as well. Yeah. So there's a community called Reddit, and they have a group within Reddit called Wall Street Bets.
Mm-hmm.
So what they do is they go out and they find stocks with a lot of short interest, especially if it's big. It's a sign that institutions are selling short, meaning they're selling the stock first in hopes of buying it back at a lower price. That has the impact of dropping the stock. All right. And so what Reddit does is they get a bunch of retailers together, and they all say, hey, let's all buy GameStop. Let's buy AMC. And they get a lot of retail buying coming in, and then the stocks shoot up. And that creates what's called a short squeeze. What's that? Well, that's when institutions buy back their positions to manage their loss. And so that adds buying, and it does some really crazy stuff here. Let me show you this chart of GameStop. Let me show you what happened to GameStop. GameStop was the primary candidate. And look what happened to GameStop here, Ryan. Let me find it here. There it is. It did that. It was trading.
Jeez.
Look at, isn't that crazy, man? It was trading about 17 or so, and then Wall Street Bets came in and said, buy GameStop, buy GameStop. The stock went up from 17, closed at 30. And then the next day went all the way to 65 and then dropped again. Now, yesterday it dropped a bit, closed lower. So they were doing this a couple of years ago, and they kind of went to sleep, and then they just showed up. And then Beyond Meat, unfortunately for us, was on the target. So on this day, right when Beyond Meat did the same thing, this was after we placed the trade, before Wall Street Bets came out and said, buy Beyond Meat, amongst others, the stock did, and intraday went all the way up here. And then look where it closed. It closed down there. All right, so that was day one of the meme craze. And then where we stand today is here. So the stock has come down yesterday, and right now we're in good shape. Our rules are very discreet, and there's a guidebook I'll talk about here in a minute. So what we did is we sold the 9 call and bought the 10. We got 10 cents, 5 times, $50. Buy this back for a penny. We net $45 on a 450 in risk, and that will be a net of 10% on this trade. All right. Now, you don't get out at the intraday, you get out at the close. And so we hung in there. The stock did drop back. It closed here. Although it got a little hot here, we were down quite a bit. The stock came down, and we're doing fine. So there's nothing to do here other than follow the rules. Two rules. There's only two of them. Buy the spread back, good till cancel, for 10% of your original credit. That's for a profit. If the stock closes on the other side of your line in the sand, in this case 9, the stock closes above 9, then you close out the trade for a loss. You manage your loss. If that happens up here, we'll lose about $100 on this trade. And we will lose 1 out of 10 typically, but we haven't, Ryan, in 16 straight trades.
16 straight. 1-6. That's impressive.
Yeah. I'm starting to get nervous. Like, I don't want this streak to end. It will. But that's 16. We haven't lost in 3-4 months. And we're operating currently at 100% wins, of course. There's your 16 trades. The average gain 51, the average loss, well, 0. We haven't lost yet. And we're making on average across the portfolio 15% per trade over a 5-day period. So what's going to happen here over time, and it can go the other way too. You can get when you first start trading this, you might get some losers in the beginning, but over time, that number will normalize to around 10%, and your average trade length will be about 7, and your average percent trades with a gain will be 90% over time. So let's enjoy this win streak. Carvana or Beyond Meat, is likely to be the next one, especially given the meme rally is fading. So that'll be 17 plus the trade that I'm going to show you here in just a minute. All right. Now, I've just talked about credit spreads and lines in the sand. What's he talking about? I know. Some of you don't know what I'm talking about. But do you understand, though, that if you're able to generate 10% on your money, you're in and out within 7 days, and you did that every 7 days, you could take the same, let's call it $500, and you could net $50 every week at 10%. What's that? $200 on 500. That's what's here. That would be a 40% gain on your money in just a month. The way I like to think of it is, I keep saying this to you all, but Moneyball, the movie Moneyball with Brad Pitt, the manager of the Oakland A's, they didn't have a budget. They had no money to compete with the likes of the Yankees, big teams that had big money. And so they went out and got players that not necessarily were superstars, but got on base. They get on base a lot. And they staffed their team with those that just historically got on base. And they got on base, and they got on base, and they got on base, and they got into the playoffs. So that's this idea. Get on base. Get on base. Get on base. We don't need home runs. We don't need triples, doubles. We just want to get on base. And if you consistently do that, which is what this strategy does, you're going to have really meaningful results in your account. So there's a guidebook. And guess how much it costs? Free. It's a free guidebook. It's a 5-step process that will help orient you as every Thursday I go through this process live. I'm talking a lot. I got to get to the trade here. So get the guidebook, 5-step process. It's free. Grab it, read it. I like to say it's well written because I wrote it, but I did the best I could to make it as digestible as possible. So grab the guidebook and join me every Thursday at 9:15 Eastern Time, and perhaps you can start to bring the power of snipers, high probability, short-term trading into your own accounts. Okay, let's go to our trade for today, and that trade for today is on Walmart. Walmart. What? Yeah, you heard of Walmart. Brian, I was in Walmart when I went to Texas. Have you been in Walmart lately?
Not by choice. See, I live in never mind. I'm not.
Well, I lived in North Carolina for a while, and I would go to Walmart. Was entertainment capital in the South. Friday nights with the cars, and but when I went into the one in Houston anyway, it was like high-end Walmart. They even had these booths where they were giving you away samples and, similar to Costco. But Walmart blew out their earnings, just totally blew them out, lifted future guidance, cited they're attracting the higher income shoppers. They raised future sales guidance. Their e-commerce was really singing. And so the stock has gapped up on the open. All right, so Walmart, let's see where Walmart's going to open up here. I'm going to take this to a 1 minute bar and see where I can find Walmart. Okay, I can't see it. All right. Anyway, Walmart's gapped up. There it is. There it is. It's gapped up all the way to 63. And guess what? That's an all-time high. What? Walmart's at an all-time high. The Dow Jones Industrial Average is at an all-time high. They blew out their earnings. They lifted their sales guidance. We could call this a trifecta. Is Walmart going to come down from here? Maybe. But I think it's not coming back down to 60 with all of the good news, all of the bullishness in the markets. The stock is at an all-time high. I like 60 as my line in the sand. So what I want to create here is a trade that will generate at least 10% over the next 2 weeks with an extraordinary high probability of profit. So let me say this a different way. I want to put on a trade that gives me 10% over the next 7 days, most likely. And I'll make money on this if Walmart goes sideways, if Walmart goes up, and if Walmart drops all the way down to 60. That's a 3-point drop. I'll make money up, sideways, and down, but not too much. Making money anywhere and getting on base with our 10% as long as this bellwether stock, one of the biggest companies in the United States, blowing out earnings, lifting sales, e-commerce business is singing. It's just super duper fragilistic expialidocious high probability of profit. So what I want to do here is sell a 60 put. Get the guidebook if that makes no sense, right? So you got the guidebook. Here's what I'm going to do here. I'm going to use this simulated trading platform in Thinkorswim. I'm not recommending Thinkorswim. There's plenty of brokers out there you can employ, but I'm looking at the expiration dates here. So I'm in the trade tab. If you have Thinkorswim, I'll give you a little bit of a few tips here. We've got 1-day options, 8-day options, 15-day options. Now I tend to like to go after 15 days, not much more. All right, so I'm going to try to sell 15-day options. All right, now I've got it already set up here. 15-day options are May 31. So I had this teed up when we started. So what I want to do here is sell 5, the Walmart, May 31, 60 puts, and then buy 5 to open, Walmart, May 31, 59 puts. And I would like 10 cents, please. But guess what? There's no money there. The mid price of that spread is 2. That's not enough. My minimum credit that I will accept, notice I'm saying I will accept. I'm not going to go out and accept the market maker's pricing. This is my price. I want 10 cents. The market makers are going to say, no, you may not. You can get 2. All right, I'm not going to do it. So now I need more credit. I need to get this mid price here closer to 10 cents. So then I could go out one more week to June the 7th. June the 7th are 21-day options. This is as far as I'll go. And notice that the mid price here is 4. So I'm not anywhere close to 10 cents here. So this means I got to do something different. What would that be? Well, let's go back to the hub chart here. And let's play around. All right, now I'm looking at what the stock's done so far today. Now notice, sorry about that. I forgot to turn off my alerts there. So the stock has gapped up. It opened there. It's now down to here. And notice the high and the low. There's the low of the bar is at 63. It's currently at 63.10, but it bounced off 63. It bounced off 64. It wants to hang out in here, at least for now. All right, now what can I do? Well, the only thing I can do on this one to get enough credit is to put my line in the sand closer to the heat. The heat being the stock. All right, so I'm using support and resistance. And I like even numbers or round numbers. So 61 is as close as I want to get. Resistance there, close to resistance there, with support resistance up in here. So 61 looks pretty good. Let's see what we can get at 61. So this is a part of the process. And yes, we're doing this live. I know there's a lot of moving parts, which is why you need the guidebook. It's free. And then I go to June 7, selling the 61, buying the 60, and I still don't see enough credit right here. So here's what I'll do then. I'm going to leave this order in, and I'm going to, we have lines in the sand and we have hooks in the water. So we're going to drop in a hook in the water, and we're going to say to them, well, I would like 10 cents, please. Look, it's coming up to 7. So it's starting to get more real. And now I just want to see what the stock's doing again. Is it plummeting? Let's make sure. Yeah, good. So it's hanging out here. We have a good shot at getting 10 cents. So I'm going to set this at mid price is 7. This is going to be selling the 61 put for June 7. Symbols Walmart, WMT. Buy the 60 underneath and put an order in for a limit price of 10 cents. Yeah, you'll give it to me for 7, but that's not what I want. I want 10. All right, confirm and send. Send. And we go back to monitor here, and you can see that working order right there. Now, when that mid price gets closer to 10, we have a good shot of getting filled on this trade. All right, so that may or may not fill. So question then, Ryan, do we have anybody that has other stocks they're looking at for today?
Not seeing any in chat right now. A couple other things in chat, but nothing. Here's CSCO.
Cisco. Yeah, let's get the hook chart back up here. And let's take a look at Cisco. I'm going to go ahead and add Cisco to the chart. We're going to see what's up with the stock itself, and then we're going to check the news here as well. That's really important in this system. Make sure you check your news. All righty. I know Cisco had earnings. I do know that. The stock gapped up at the open, is coming back down. Let's check the news here. So I'm going to go into, you can get news anywhere, y'all. Your broker platform has news. I'm going to go to finance.yahoo.com. I'll type in Cisco. Let's see. What's the news on Cisco? Not I know there was some more earnings data here. I might have to go into a different place. Here we go. There it is. Cisco Systems fiscal Q3 earnings per share revenue beat. So they beat on earnings. They beat EPS, and they made more money than they said they'd make. Revenue beat. Lifts full year sales outlook, and the shares rose pre-market, but they're coming down a bit. Oops, let me go to the right place here. They're coming down a bit here. Cisco hit 50. That's resistance. Let me show you this here. You can learn a lot of technical analysis. There's a ton of it. But resistance and support, to me, are fundamental. You must incorporate support and resistance. So 50, this is not where we're going to sell. We're going to see, maybe consider doing something bullish on this here in just a minute. But look, resistance, 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 resistance. Here, even today, it tested 50 and is coming back down. So I'm a little nervous. That's really good news. And Cisco should be dropping, and it's down for today. So what I'm going to do now is go into Thinkorswim and get some. They have really good news here. Let's see what's happened after the announcement here to see if there's anything that's come out. Maybe like, analysts come out and say hold Cisco, or any downgrades or anything like that. But the news is real. Oh, that's Walmart. I'm in the wrong stock here. How about I pick up the right stock? That would help. Cisco. All right. So I'm not seeing any. Yes, and then Oppenheimer comes out and maintains outperform on Cisco, and that happened at 9:40. That just happened a minute ago. So that is good news, and yet Cisco's dropping a bit. So let's just see what we want to do with this. I think we can do something on this one. I don't see any real news for the drop. It is bouncing off the red line here, which is the 50-day average. So now I look at this, and I'm thinking, how about down here? 47. So the closest I would get on this one is 47. Why would it drop all the way down to 47 after blowing out earnings, raising future guidance, and Oppenheimer came out and maintained an outperform rating on Cisco? So that's the idea. So let's sell at 47, right at these close to these peaks. And given the stocks come down, I think it's going to bounce here and go higher from here. I think it will hold above the 50-day average. We got support there. We got support at 48. Look there, 48, and then 47. So we've got 49 currently. That's one support level. We've got the 50-day average. That's 2. We've got 48. That's 3. And then 47 would be 4 support levels in the event Cisco starts pulling back. Okay, so let's go get it. Now, let me type in the symbol here, Cisco, Cisco, and let's see what's there. I'm going to go to the 15-day options, and I'm going to find 47. Ooh, maybe. Yeah. 47 and 46 shows a 5-cent credit currently. I need at least 10 cents once again. I could consider going out to June 7, and there we go. June 7, 47, 46 put spread. There's 11 cents there currently. Let me do 5 of these at 11 cents. Now, June 7 is a 22-day trade. That's sort of my max. I don't go over 3 weeks. We just got Walmart for 10 cents. What? Awesome. And we're about to get Cisco for 10 cents as well. Let me go ahead and confirm and send this one, and then I'll give you both trades here in just a minute. So I've just sent that in. And these are the orders here, right? So this one was filled on Walmart. So we sold the 61 put for June 7, bought the 60 put. We sold for 21, we bought for 11. That's a 10-cent net credit. And then I've got Cisco up here. Mid price is 11, 12. I'm gonna. One thing you can do on these is let's check out Cisco. I want to see the chart again. Is Cisco coming down harder? Let's see. No, it's just at the 50-day average. No worries, man. So then, one little trick here for you all is, it looks like we should be getting a fill. The mid price is 12.5 cents. So what you want to get in the habit of doing is canceling and replacing your orders. I might even lift this up a little bit. Let's go to 11 cents. Now it's at 13 cents mid price. Let's try for 12 cents. I want this. Confirm and send. And I'll just let that sit for a little bit here today. And good chance we'll get a fill on that one here momentarily. Another one that I somebody was telling me about. Well, actually, nobody was telling me about it. I read it this morning, and that is on Chubb. Let's see here. Let me add Chubb. Warren Buffett is buying a boatload of Chubb. It's one of his preferred stocks. That news came out yesterday, and Chubb gapped up to 270, rose from right here around 252 or so, gapped up to 270, is coming down just a bit. This is not the kind of news that I think is super high probability. The best news are like the trades we just did. Lifting future guidance, beating on earnings. That's the second best. The very best news is when a company comes out and says, we missed our expectations. So they miss on their earnings announcement, and then they lower future guidance. When you see those are the best. All right, everybody, that's a wrap for today, this week. Hope you have a great week. We'll see you next week at 9:15 Eastern, same time, Thursday, same bat channel. Please get the guide. I invite you to get it, read it, maybe study it a little bit, and then come and join me every Thursday at 9:15 for live high probability short-term profits. Have a good week, everybody.